Can everybody hear me okay? Yes. If I fade away, just give a shout and I will bring it back up here. So, being the last speaker of today always comes with the luxury of having a very, very energized room, which we have today, I see. So, I would just say let's start off. I'm going to introduce myself a little bit and then we're going to go into the content and the message that I want to share with you today. So, I'm Ivar Lammers. I'm Global Head of Financial Crime Prevention for Wholesale Banking. Now, financial crime prevention means something that we know as KYC. Not working? Better?
Yes.
Better. Okay, cool. So, KYC. Do we know KYC? It means kill your career, right? And the other part actually is AML, anti-money laundering. But you need KYC to be able to do AML. We're going to get to that in a second. So, I'm heading the AML and KYC first line of defense operations for wholesale banking, which means we're dealing with international corporates and financial institutions and government bodies. So that's that. Let's kick off. One more. So we have a lot of Gen AI providers in the room, right? Or AI solution providers. Correct? Or nobody dares to speak up, but that's you. And look, you're doing fine. Look at you. And why are you doing fine? Because you are the solution. You're not the problem. So who is the problem? Who owns the problem? That's me. I own the problem. So, and this is what I want to chat with you about today is there are a lot of very, very effective solutions, technologies out there, but they are new and very abstract to people that are or have studied criminology or are a CEO into hardcore operations and you don't have that affinity with technology. It's very abstract. And we own a large operation in a financial institution or somewhere else, and we need to figure out how do we connect that rapidly evolving, faster than ever technology to our operation in a way that we stay safe and secure and that we get effectiveness. And effectiveness typically means reducing costs, and reducing costs means reducing work volume. Agreed? Okay. Now that everybody's awake, the agenda. So, first of all, just to set the scene, I'm going to go into the role of KYC in the financial crime prevention landscape so that everybody understands how things connect. It's a bit of a refresh. It's a slide that I used in one of the earlier presentations last year. When we've done that, we're going to go into data quality. And I'm going to share with you what does a KYC dossier, a KYC file of a client really look like. And that visual is going to travel down the presentation towards what is perpetual KYC, because that is the type of KYCing that requires these types of technologies, and that's where we start to make the connection between the technology and what we need to do. Then we're going to get into automating data collection. I'm going to explain in a second why this is very important, so bear with me. And then we're going to go into the final bit, which is the most exciting. So how do you then, knowing all the above, how do I operationalize your technology in my operation? And this is a collection of industry things that are going on. Maybe you've seen also on LinkedIn or somewhere else the sandbox of KYC, professional KYC, together with Capgemini and the Encompasses and the Contextas, but it's also a bit of the ING experience. And I'm going to share also a little bit where we are, not too specific by the way. Having said that, let's get going. So, the landscape. First of all, this is the most important part for a financial institution because this is our annual cycle. We need to submit to the regulator something that is called a risk appetite statement, in which we deposit to the regulators, this is what we accept in our books, and this is what we don't accept in our books. At the end of the year, we've got something that's called a SIRA, a Systematic Integrity Risk Assessment. And this is where we to the same regulators. ING is active in 37 jurisdictions, so we've got a lot of regulators that we need to deal with, where we deposit, okay, we have stayed within risk appetite on 8 of the 10 points. In 2 we didn't. But you know what? Data-driven, we can actually substantiate how that happened and how we're going to evolve our financial economic crime controls in a way that the next time we do capture it. So far, so good? Okay. In the middle, we've got 3 controls, and this is where the KYC and the AML kicks in. So we need to do a KYC, a know your customer, not kill your customer, on 3 areas. for a specific purpose. First one, I need to know the full, what we call IDV, identification and verification of the ownership of the client, which can be a structure very simple on a mid-corp client of 3 entities in just the Netherlands, but also be a private equity investor that has 1,200 entities. Okay, so there's a big difference there. But I need to know all the names of the entities, the full ownership, I need to know all the main principles, and I need to be sure that they are who they say they are. And that's a very complex process. Why do I need to do that? That's control 2, sanction screening. I need to be aware whether somebody that is actually sanctioned by any regulator is trying to perform activities through my books as a bank. And if so, in flight, I need to stop it, for a transaction, for instance, counterpart of transaction for my client, of this example. The other part is if somebody tries to become a client, or a current client changes ownership, I want to know whether those individuals are sanctioned or not, for the obvious reasons. So that's that. Point 2 out of 3 in my KYC file. I need to know the purpose and nature of the business, which is a very broad understanding, but at least it is also the, why do I do business, the business that I do, and therefore which products am I using with you as a bank, in which jurisdictions. So it's a matrix. Do I do trade, lending, working capital, financial markets, payments and cash management? Do I do it in just the Netherlands or Western Europe, or also in Asia, maybe in the US? It's a big difference. Then I need to know why. Example, if I would be the Crown Plaza Hotel, you would expect me, through your books, to do an equivalent of so many meal bookings, sandwiches, maybe drinks. You wouldn't expect a foreign currency transaction towards Myanmar, for the sake of a bad example, by the way. So we need to baseline who you are as a client to monitor continuously if you behave in line with how you have represented or identified yourself to us. So that's the third control that we need to do. And that's the one I spoke about, by the way, also last time. It's a very sexy topic, we're not going to go into that today. The third one, and this is an important one for the discussion or the story today. If I would need to KYC the Banking 50, can I go to the Banking 50 site and trust that, because it says so, the internet site, that Morten and Elena are the owners? Do you know, can I do that? Can I just go to the site and see it and trust it? I cannot. So there needs to be a trusted source, which could be a trade register. Could be, I'm saying could be because the compliance department in a financial institution decides which sources are trusted, which I can use, and which aren't. It's essentially a whitelist, not a blacklist. So they decide what I can use, all the others I can't. An internet site cannot be used because if they want to disrupt us, not being the Banking 50, but obviously, but others, they can just put anything out there. Right? That's why technologies like web scraping and these kinds of things will never work. I need to have a trusted source. So, if I get to, for instance, private equity or trust, I need to connect to my client. If I have identified that Morten is the owner of the Banking 50, I still need to have an independent, verifiable source that substantiates, evidences that he is who he says he is, and that he is incorporated where he says he is incorporated. And that means a copy of passport. On a trust, I need from the trust agency, I need the trust letter to see who the ownership is behind the trust. Otherwise, I cannot see whether somebody sanctions is hiding behind the trust in my books, doing business through my books. So right here, this is the most important part. Any data that I can find in trusted sources is the easy part. Any data that I can't, which is the majority in wholesale banking, not so much in retail banking, is not. Let's jump to the next one. Data quality. What does a KYC dossier look like? So we're going to build upon the story so far. Let's go. Like I said, 3 areas: identity, behavior, and verifiable evidences. Now, the fact data that you would see in there, and the sources that we can derive it from, are listed on the left, and the system of record you see on the right. So that's for a financial institution, where would you store the data to the right, and to the left is where can I, like, perpetually get that information. Now, let's take the example of identity and the example of the trust. If I would have a trust, I would need to have the trust letter to identify who is the ownership behind the trust. I'm going to be dependent on the lower half. I don't have a trusted source, I need to create one. That means I need to have a banking portal. If I've got a banking portal in which, in an interaction with the client, who I've identified, so so the KYC representative, provides me the trust letter, in this case that would be the trust agency, then I've got a trusted source, but that will need to be perpetually updated. Okay? If I've got a mid-corporate client that I've listed at the KVK, Trade Register in the Netherlands, I can trust it, I'm allowed to trust it, and I can perpetually go back to that source in an automated way to see whether the CFO, the CEO, or the ownership has changed. If you go further down to the behavior, that is proprietary data of the bank. If you don't have the data, something's going wrong, because you should be able to get that out of your systems of record, right? Having said that, this is an area of technology because we need a lot of, not AI, but more advanced analytics to combine all these platforms, your trade platform, your lending platform, financial market platforms, payments and cash management platforms, probably payment engines across the globe for multiple countries that you're operating in. So that requires technology, but the data is trusted, it sits in your own systems of record. So that's, from that perspective, the easy part. Then we get the verifiable evidences, and this is a very tricky part. Do you know what the most favorite client outreach channel is by everybody? By the way, banks and clients? Microsoft Outlook. Do we feel safe exchanging a trust letter with the trustee or trust office over Microsoft Outlook? I don't think so, right? If you get hacked, we're going to be in the news. So that's where you need to try and coach your clients towards your banking platform, so your banking portal. The clients, especially in the corporate sector, they are multi-bank, they do not appreciate the bank proprietary channel, so they want to have multi-bank channels, like Microsoft Outlook, by the way, but it needs to be a secure channel, so it needs to be something that you can, again, perpetually use as a source, trusted source, where the client continuously updates that information. Let's move on. So now we're going to go to perpetual KYC. The KYC process historically has 3 phases. We're going to do a research with all the information that we can find in trusted sources again. And based on the financial economic crime policy that we have, could be us as ING or an ABN AMRO or an HSBC, JP Morgan, whatever, you determine what information in line with your policy you would still require from that client in order to complete the risk assessment. And only as of the point that you get that information, you get to phase 3, risk assessment. It's a very lengthy phase. And if we put that on screen on the next page, on the top you see how that historically happens, and then we're going to move into what the concept of perpetual KYC is. Let's, for the sake of this example, take a normal risk client. Industry standard is every 3 years you need to re-CDD. You're probably going to ask yourself, okay, why would you do that every 3 years? Well, that is actually because in those 3 years, the trust, the ownership behind the trust could have changed. The behavior of the client could have changed. It could be operating in a different jurisdiction. And you would probably say, but Ivar, you can see that in your systems, right? Okay, fair enough. In my payment systems, in my lending system, I would be able to see that. But if the ownership changes, I don't. So by law, I simply need to redo it. As we, as I'd like to call it, boil the ocean again on the entirety of the client. And this is where the client centricity comes in and all the, let's say, notoriousness of the KYC process goes in. Imagine going to the lower half. If we would have organized our data landscape, identity, behavior, verifiable evidences, in a way that we have the maximum amount of data points available to us in a perpetual way out of trusted sources. These are the 2 important things. Perpetual, continuous. Continuous could be every year, could be every quarter, but not every 5 years. So continuous, trusted source. Those are the 2 things. If we would have that, we can go to a point where we say, no, we're not going to do anything on a client because we know when what is changing. Okay? And if I've got the banking 50, to take that example again, and I see that Morten would not be the owner anymore, but it would be Ivar, myself, the bank would probably say, Morten lives in the Netherlands. He's not. Are you sanctioned, Morten?
Not anymore.
You don't appear? Not anymore. Okay. I'm not sanctioned either. Now, if Morten is not sanctioned, then I'm not sanctioned. But the ownership changes from Morten to myself. Do we need to perform a KYC exercise? No. No, we don't. Because the risk hasn't changed. We're not done yet. Maybe that's what you mean. We're not done yet because in the set of flags that in your policy you define, there's no increased risk. because we're both not sanctioned, we both live in the same jurisdiction, nothing really changes. However, the bank would ask me for my copy passport as an independent verifiable source to ensure that in the screening capability of the bank, the right person is being screened and not the wrong one. But that's something else, and doing a complete KYC exercise. And that's what this says. It says if you are able to continuously have all the data from your client, again, identity, behavior, verifiable evidences, in a way that you have it updated regularly, and it's a trusted source, yes, also if it's the banking portal in which the client needs to update it, then you can start applying technology that relieves you from a lot of manual work that you are executing today. A lot of paper that we push every day for a lot of clients, a lot of client interaction that the client doesn't like, that our front office doesn't like, that I don't like. Okay. So that's what this is about. Maybe so far, any questions or things that need to be, everybody still awake? One more. It's a lot of text, but it's hard to do it differently. Again, it's setup. Identity, behavior, verifiable evidences. If I have an identity, my fact data in a trusted source, which is trade registers, the SWIFT registry, UBO registers, if they are opened up to it, because that's not always the case, I have a trusted source and a system of record, and I have data availability. So then I would be right there, I would be green. I'm going to get back to the green and amber in the next slides. So bear with me. If there isn't a trusted source for the ID and V, verification ownership structure, I need to go to the client outreach portal. Okay? Then I don't have a trusted source, so I need to create one by actually imposing a client portal upon my client, which they don't like, trust me, they don't. But when they see the benefit, and we went through a couple of pilots with this, with clients, where I talk personally to the treasurer, and together with him upload his KYC passport, in this case his village of the year, into the portal, they start to recognize that value. Behavior is the easy part, that should be green, otherwise you've got some other, let's say, data debt or tech debt to be solved. And then we've got the portal that is directly connected also to the upper part. Essentially, any information that you could not get from a trusted source, you need to get via your digital portal, regularly updated to have the maximum completeness of data. Let's go to the next slide. We're going to go through three slides, one on the ID and V, then something on behavior, and then something on the portal to let it come alive. So what we see here is the concept of a data hub. Data hubs could be contact size, it could be encompasses, it could be black swans, and there's much more. And what they do is they allow you to configure your entire trusted sources list, which essentially, don't get this wrong, could be for a bank the size of ours, could be between 100 and 300 sources, or somewhere in between, as you can imagine. For instance, the Netherlands, really easy. KVK is by law the trusted source. We use this and nothing else. If you move a little bit more to the east, you would get countries where you would have 3 sources, for the sake of example. Primary, secondary, other. What do I do when there's a different value for the same data point across those 3 sources? You take the primary one. Otherwise, you take the secondary. Then you need to baseline for your next perpetual data run to understand where you were and what you need to do next. And this is a piece of technology that rates as not Gen AI, but AI technology, that those providers, and a lot of others, by the way, also, so you get commercial here, can provide to you. If you go a lot to the west, the United States, for instance, you get up to, I think, 9 sources that we've got that have no hierarchy. So if then you've got a different value, you simply need to hit handle, you get operational work at your hand. But that's what that portal does. Now, at the bottom right, at point 4, you always get a distillate of those types of entities, ownerships, or whatever in the structure you could not find. And that distillate that comes out of information that you couldn't find is, in our case, API'd kind of directly to the client outreach portal to ensure that we have completeness of the data from the client. Okay? So this is identity data, and that's something that we call, in our language, internally, a data hub. Let's go to the next one. We get to behavior. These are mock-ups of a test environment of what we actually have in production on our advanced analytics environment, where we have data released all the core banking platforms from clients to lending, to trade, to working capital, to payments, to accounts, to everything, where we get that matrix of this client does these products in these jurisdictions with values, volumes. Obviously, we have got that API'd as data, and it isn't typed over as a GUI, but that's how we do that in terms of the behavior. Let's jump to the next one. We get to the find out this portal. We've got a bank proprietary portal. We're still building the journey in there for the reuse of information. This is Corp ID. Maybe you've heard of it, maybe you haven't. It's one of the multi-banking solutions that are out there. We use this one with our clients, together also with other banks in the Nordics and also others in Western Europe with the same clients, in which we configure the passport to the extent that we cannot find the information in public trusted sources. So that's it. Let's now jump to the next part of the agenda, which is the final bit, how then to operationalize, if we know all of this. Let's go to the first slide. It's quite a bit of information. I've spoken all the time about you need to have your data perpetually, continuously available, 1. Trusted sources, 2. And I promised to get back to the amber and the green, right? And that's exactly there. So to the extent that your client maneuvers in the far amber side of things, you're in trouble. You're completely handed over to whether your client wants to populate itself in a client portal, digital portal, and regularly update that. If you're more far to the green, you're not. You're okay. So this is where the domestic mid-corps and others sit, where you can perpetually retrieve that data from trusted sources and your own systems of record. So the examples of clients you've got here is you've got a high-risk industry with a trust and private equity in the ownership, you're amber. If you've got a domestic mid-corp, you're very green. And that's the level of difficulty that you will be having with those clients, or easiness, on the green side, in moving towards perpetual KYC and deploying AI, Gen AI models. So let's get to the next page. It's got a lot of animation, so careful with the, not to trigger happy. We're going to go through a couple of phases at the top in the operation. So the beginning is what we used to know as data gathering, then highly automated. So we're going to assume here that we already have a fully digitized KYC file of the client, meaning that we have all the data points in a digital way, not a PDF, digital. Then we're going to go later into the client operations, which is going to be divided into areas, and then we're going to get to behavioral risk, it's also automated, and to the actual risk assessment. At the bottom, you're going to be seeing where we have, on the blue side, AI, Gen AI-ish solutions that we're starting to use, and on the bottom, you would see the more traditional, in our case, data, for instance, hardcore workflow. So let's go to the next step. My policy tells me what the material events are. I capture a lot of data points in the KYC process, but only a couple of items are really marked in my policy as a flag. Ownership change, product change, jurisdiction change, and you can add to the list. So you could, I'm not intentionally not being very specific, but let's say up to a 40-ish items, which could be ownership, but ownership has more data points too. We'll get to it in a second. If I'm able to monitor those, I'm fine. And that monitoring, that's something for which we use AI. A light version, so model learning, LLM, allows us to perform this. But it only works if we have the data available. So right there, and I'll show you in the next slide also how that works, not yet please, not yet. We are doing okay, we are actually already doing it. But the clients like the private equity investments, investment funds, fund advice, those kinds of clients are in the very dark amber. We cannot do that there. That is very difficult. But let's assume we are able to have the data extraction, IDMV, your own system of record, and the client portal sufficiently to cover all those data items up to a 40. Then it starts to run. And at some point, it will find a change. It's the Morton towards Ivar, for the sake of example. So if you would hit it now, that's this one. So if you see a principal change, you're not done. Then we get into the area where we were. I need to have a date of birth. I need to have a country of residence. I need to have an independent verifiable evidence source, which is the copy ID. That's where the second part of your data operation, which is then manual, starts to run. For the two other examples, you can hit it twice. If the client, one more. If the client does, for instance, only historically payments and cash management and has a lending facility, and all of a sudden it starts to do trade in Asia, okay, you've got some work to do here. Okay? Doesn't necessarily mean that there's an increased risk afterwards, but you've got things to figure out. Same thing is the ownership changes, which is something else in the main principle. You've got work to do, and you've got quite a number of data points in your operation that you would need to do. But right here, that's the first value that you unlock. You're not boiling the ocean. You're very targeted, only towards where you need to do investigation on data to pull the data forward. If you take one more. This operation would add the 40 data items up to, worst case, approximately 500. Worst case. But that's quite a universe of data points, and you're minimizing the 500 that you would usually be boiling the ocean on towards the client, towards only those 3 in this example that you would really need to figure out, which is a big win for client, for bank, for market. And we're still effective there, if we do our job right. If that's done, then we get actually to the point that we had earlier. Do I still need to perform a review? If we hit the button one more time, the answer is actually not yet. Because even if I would say, hey, I've got a material change, I've got that information, and Ivar lives in a higher risk jurisdiction than Morten, he can still apply something that we call behavioral model, and this is GenAI, where all the data points are being combined and are going to be generating a narrative. This is kind of JetGPT-like, if I may. This is where your model could have a solid learning, providing you the data and information on why the risk increases or why it doesn't. And then also with an advice to do a full risk assessment or not, with the narrative that substantiates it. Now, this is very far-fetched. This is, if you would be working in compliance and you would need to oversee the first line of defense, this really starts to get scary because then you get into a model and you want to understand the model risk, if you know that term. Do we know model risk? Yeah. That's becoming a big thing, especially when you do this. Data up, technology, AI, not too sexy. People can understand it. When we go to the event trigger side of things, people understand. You can pull a file through the traditional way of working and a new way of working, look at the changes and become comfortable or not. But when you go to behavioral models, with narratives produced out of that model, upon which you would decide either to do or not do a CDD KYC review, that's where it becomes really abstract for stakeholders. And eventually, and that's the last hit on the button, you would get to the actual risk assessment. But if you would arrive there, while you've already flushed out a lot of work, paper shoveling, negatively spoken, even then you would have a very effective effort to be done, because you're not going to be looking at the entirety of the client. You're going to be looking at that ownership entity, could be a trust. You're going to be looking at the intermediate parents, or maybe that onboarded entity under a fund, within a fund financial institution, specifically, because the other context hasn't changed. And that saves you a lot of time in the actual risk assessment. You're going to be looking at that specific flag, not the entirety of the client. And you're going to be looking at it in the perspective of the current version of the policy, which could have changed since last year. And that's also a level of effectiveness. Now, let's go to the concluding slide. Oh, sorry. Well, here we've illustrated where the AI technology really sits. And if you tie that back, maybe good to do that here to the first page with the 2 memes, or memes, whatever they're called. This is where it becomes difficult, because to transform your operation that has been running essentially as is for probably 10 years or so, to then understand GenAI and being able to connect the dots also towards second line of defenses and regulators, by the way, because you are going to be visited. I'm visited multiple times a year by regulators from multiple jurisdictions. We need to be able to explain, to connect the dots, operate safe, create the audit trail, secure the audit trail, drive effectiveness, and still unlock that value of GenAI. That is extremely difficult. Okay, so that's why I did the opening as I did it. Let's jump to the next one. Because I still want to do a panel, I think. This one sums it up. So what I'm trying to say, well, here first of all, data quality is key. So it needs to be accurate, it needs to be updated, it needs to be out of trusted sources. And then finally, like I just summarized, you need to be able to adapt your process in the way I just described without repeating it all again. And if you look at the right, it's a bit abstract, but it tells you, okay, so the level of digitization in combination with the level of listed regulatedness of a client, trusted sources, is going to determine how you can unlock which value first where. And I promise you to share where we are. We're here. So what we've done is, we have been looking at a homogeneous group, which is essentially domestic mid-corporates and lowest of low-risk corporates, in which we can actually trust all the sources in which we can find the information. Yes, we do have the copy passports of named principals in the client outreach portal, and we ask the client to regularly update it. So what we do is we kind of literally put a digital post-it, it's automatically done, on all the evidences with the request to update it or reconfirm that it hasn't changed, after which we are able to trust it, and you run the behavioral model. Currently, for us, it does not yet mean, and this is how do you take compliance along, that we do not do the actual risk assessments. That's step 2. Because first, we kick the files down the road and we redo the model and take then, at that point, that sample size, a few pull through the model and say we're not going to do them anymore. And we're going to do the same ones also, historically for compliance to verify whether they are comfortable indeed that we would not do that. So we very carefully take it step by step to build the audit trail of effectiveness and substantiate for model risk that we're fine. And that's then the lowest of low risk. We've got a very long way to go before we get the higher risk entities, or less lower risk clients also in the same way of working. So it's a technology that is really here today because it is, and it is effective. But before you can, for lack of better wording, massage it into the ecosystem, it's going to take time. It's going to take a lot of learning curves by a lot of people that are very smart and very good at their job, but less intuitively well with things like Gen AI or advanced analytics. That's it. Any questions? Or do we want to jump to the panel?
Well, if there are any questions, let's take them on the panel. Okay. Yeah.